Welcome to the snapshot edition of the daily video update, where I'll go through the action in the market for Thursday, April 14th, and then briefly discuss how things look for Monday, April 18th. And please be reminded that the stock market is closed on Friday, April 15th, in observance of Good Friday. So trading will resume again on Monday. So what happened? Well, we had a pretty much a flat open. And then some selling came in pretty quickly, and that took us down below the daily pivot. That's when things switch from being more positive to negative. The pivot point's kind of a line in the sand. There was a slight bounce back up to the daily pivot, but then some selling came in, and that took us down to S1, only to see a bit of a bounce back up to the pivot again. And that's what action you tend to see in sideways choppy markets, not only looking at daily bars, but also looking within each day. There was some more selling as we got closer to the close. That was a little more trendy there. And that took us below S1. And we ended up closing right at the low for the day. We ended up being down 1.21%. There was an increase in volume, but it's still below average overall. Now, as far as our technicals, we are negative. At least looking at our charts, they're pretty much negative across the board. The one thing where we're not showing an extreme negative reading right now is with sentiment. And I'll show you a chart and talk about that a little more. The big fixation right now is inflation and interest rates. That seems to be the number one topic right now when it comes to the stock market. Now, there's other things. There's other geopolitical events that could easily come to the forefront. But right now, it's interest rates going up, stocks go down, and so forth. So what are some comments? The technicals are negative. We had regained the 50 and 200-day moving averages on Wednesday, only to lose them again on Thursday. We are short-term oversold again. So that might give us some kind of a bounce on Monday. We might work our way into more of an intermediate term oversold condition if we continue to decline. But at least some of our short-term indicators are saying, yeah, we're looking pretty negative right now. And that is sometimes when we see a bounce. Again, as I've been saying, the real narrative that's driving the market right now are rising interest rates. Interest rates go up, stocks go down. Interest rates go down, sometimes stocks go up, but sometimes they go down. The yield curves are no longer inverted, and I'll probably stop talking about that now because we're back more into a normal situation. And now we're just waiting to see, is that positive backdrop that we might get, that we have seen in the past, once yield curves are no longer inverted. Sometimes we see a real push up in stocks. We don't know. We don't know when that's going to happen right now. And there's no guarantee that it will happen. It statistically has happened, but we don't know if it will happen again this time. The dollar index did go back above 100, and that might have been some of the source of weakness in stocks. The dollar starts getting around 100, and stocks don't really like that. They want a good dollar, but a weaker dollar, and that just makes everything look better. And it handles their import exports easier, and it makes their accounting look a little better. Of course, the big topic now is, I'm calling it Twitter talk. Elon Musk went in and said, well, I'm not just going to own 9 or 10% of the company. I'm going to buy the whole thing. And some people really like that from a freedom of speech standpoint. Other people say, no, that will limit freedom of speech. And then I also heard, I'm having trouble finding some confirmation on this, that Vanguard, they're a money manager, and you might have a lot of mutual funds through that company. The original S&P 500 index fund, the very first one, is now part of the Vanguard group. They also came in and bought some more Twitter stock, and now apparently they're a larger shareholder than Musk is right now. And what are they going to do? Are they going to try to stop him? Do they like what he's doing? Don't really know how that will play out. The economic reports, we did see retail sales that actually declined when you take the whole report together. So that's just showing a little bit of a slowdown. People can't go out and buy as much, and retail sales are a huge part of the US economy. So if that shows a decline, and it wasn't much of a decline, but still it did decline, that could suggest an economic slowdown. And then consumer sentiment actually improved a little bit with the preliminary report that came out, and I'll show that chart. We are still in a trendless environment. The ADX is below 20. I'll also show that chart briefly. And our bias is negative because we had another down day, and we've had pretty much a negative bias lately, as well as our momentum has pretty much been negative lately. Here's the University of Michigan Consumer Sentiment, the preliminary report, where it bounced a little bit. You can see way over here on the right, we're up around 65.7, but we're still seeing interest rates really going up as well. So to get back more to a good, healthy environment, it's okay if interest rates go up, but we also want to see the overall trend of people feeling better about things at the same time. And this was mainly focused on how are people looking into the future. They might be feeling like garbage right now, but they're hoping that interest rates will settle down in the future. They're hoping that gas prices might settle down. So their future expectations are making this look a little more positive, at least right now. But that can always change. We could go through some negative news cycle, and all these folks kind of don't have as much optimism for the future as they had when this survey was done. Okay, then we saw a bit of a tick down, but we're still more in neutral territory as far as our fear and greed index. We're not seeing what we saw in the middle of March when you can see over here a month ago, extreme fear down at 19. Well, we're at 42 right now. If we're hitting some kind of an extreme bottom based on emotions, we've got a lot more room to fall. We're not showing that right now. And then here's our daily chart, which shows kind of we're bouncing sideways. We are below the daily pivot, so that's more of a negative context. And if you look down at the bottom where volume did increase, but is still slightly below average. Here's our ADX, where we're kind of going sideways, but we have not crossed over the moving average yet. So I still count that as declining. We're seeing a decrease with the red line, but we're also seeing a decrease with the green line. So since the red line's on top, we default to this being a negative trend. Here's our moving average spaghetti tree, which just shows we're down below all of the moving averages. We fell below the 50, the green one here, and then we also fell below the 200-day exponential moving average. Our moving average rainbow is starting to collapse again, and we're getting further down to the bottom of the rainbow right now. Our long-term trend is still looking more negative because we are below the 200-day simple moving average. The dollar, this is a weekly chart right here where we were actually able to break above 100. And that seems to be kind of the line where when we get above 100, that seems to have more of an impact. But I've seen when we were down around 93, 94, kind of going up here, and stocks declined. They blamed it on the dollar at that point because it was showing some renewed strength. So just take it for what it's worth. So what's our outlook then for Monday? Our technicals are negative, but on a short-term basis, they are oversold. We still remain in this trendless intermediate term range. And that's really where we've been for all of 2022. There's still this back and forth that goes along every day between growth and value. Interest rates are the real obsession right now. We also are hearing about some things in China. They might be lessening some of the lockdowns, but then there's also some kind of scary things coming out of Shanghai with people not giving access to food and things like that. And what's that going to do to the Chinese economy, which could eventually then feed over into the US economy because we buy so many things from them. On Monday, we have the NAHB Housing Market Index, not a big mover in the markets. We still have Russia, Ukraine, but from a stock market perspective, there hasn't been really any developments to drive sentiment in that regard, but it's still raging on. I just talked about China and the supply chain. And then, of course, the big fixation right now is inflation as well as interest rates. So what are our scenarios? How can we keep going down from here? If interest rates continue to rise, that will likely push stocks lower. If there's more inflation fears, they don't even have to be real. People just have to be afraid of inflation, although it is turning into a reality. That could push things lower, and it's making more of a negative environment. And our technicals are negative right now. What could make the stock market go up from here? We still have that potential scenario that after the yield curves reinverts or get back to normal, where sometimes we see a real boost of strength between the time it starts until we start getting into some kind of economic problems, usually a recession. So that's still kind of on the back burner, but we're not seeing any evidence of that yet technically. So we can't really work that as a pliable alternative or a pliable scenario right now until we see some price action to confirm that. Also, we are short-term oversold. That could help get a little bit of a bounce on Monday, possibly. The moving averages and the pivot points, as we've been seeing in a lot of our charts, if we're falling down, they might provide some support. If we're going higher, we need to be careful because they might provide some resistance. The area that we're in right now is number 3, sideways. The ADX is below 20 and it continues to decline until we see it turn up enough to cross over that moving average. And when we're in this kind of an environment, we see a real slowdown in price movement, kind of like what we saw on Thursday. And even on the daily charts, we're also seeing more choppy sideways action. So what's our conclusion? Right now, the S&P overall is negative. Short term, it is negative, but oversold. Now, it could become even more oversold. We might have some more declining yet to do, but we could also justify a bounce on Monday. Intermediate term, we are negative. Our oscillators are pretty much all negative now. There's still a few that are still rolling over a bit, but they pretty much have crossed over negative. And we're below the 50 simple and the 200 exponential moving averages. Okay. Long term, we are below the 200-day simple moving average, so that contributes to our long-term trend being negative. Again, you can pause this if you like. I will be putting out a weekly video, but I'm not probably going to post any of the monthly videos over the weekend. So thank you very much. I want to wish all of you a happy 3-day weekend, a happy Easter. I hope you get some time with your family, do some things that you enjoy doing. Maybe you get the day off on Friday, and I will prepare the next snapshot video after Monday's session.